Hello guys, welcome back to the channel. So I want to help you guys solve some of these capital problem most of you guys face in trading. Now, it doesn't necessarily have to be capital problem, but I want to teach you guys how to trade a small account, how to flip it from as little as 5 USD, 10 USD to above 500, 1,000, 2,000, $3,000, depending on where you want to take it to. All right. So this video is going to be broken down into two categories. The first one is the broker we are going to use. Right here on my screen, you can see this is SNET. This is the broker I use. This is the broker I want to recommend for you guys. Now, there's a reason why we want to make use of this broker, because not all brokers will support depositing a small amount of money, and not all brokers will support the kind of thing we want to do on this account, like flipping a small amount of money, because there are some brokers you'll be trading, they'll be telling you not enough money for you to execute your trade. So SNET is going to allow you up to 1:2,000 leverage. So with that 1:2,000 leverage, we can execute trade as many trade on a small account. All right. So that is the benefit, the advantage of using this broker. Now, the alternative broker I will recommend for those of you that your country does not support SNES is 8cap. All right. 8cap is the alternative broker I will recommend for you guys. Those of you from Canada or from US. So you can make use of 8cap. I think 8cap supports up to 1:500. Okay. So that would be enough for you guys to partake in this training. Okay. So after creating your account, deposit your money. You can start with 5 USD or 10 USD. Now, the most important part of this video is how you should engage these daily activities, like the technical analysis part. That is where I want to spend much time here, because most of the things we'll be doing is going to come from our decision from the market analysis. Okay. So I'm going to give you guys a strategy or a technique of flipping small accounts that you can start adapting today. Now, when it comes to technical analysis generally, all right, when it comes to technical analysis, the most important thing is market direction, which means the direction of the market on a particular day, particular week, or particular month. But because we want to flip this on daily basis, we want to focus on daily direction. Okay, so this is what I usually tell my mentorship students. If they want to engage on everyday trade, they must make sure they know their daily direction. Okay, so daily direction is what we are going to start with. Then I'm going to show you guys how to execute your trade, because basically on flipping a small account with this kind of account size, there are two ways of engaging such activities. Okay. The first one is account stacking. Okay. Like stacking the trade. This is how stacking works. Okay. Let me go to 1 hour time frame. Let's say we wanted to flip account on this particular day, this current, let's say yesterday market, okay, this particular day. So this is how stacking is done when you want to flip a small account. Stacking actually means as the market is progressing, for example, let's say this bullish day that took place yesterday. Yesterday was bullish day on this ES 500, okay? So as market is pushing gradually to your direction, so this is what most guys do, because this is not the approach I want to teach you guys, all right? Stacking, this is how stacking works. You just keep dropping your orders. As market is going, you keep placing your buy, you keep placing your buy consistently, keep placing your buy. It could just be on a fixed lot size, or you can be changing the lot sizes. So you just keep placing those buy, keep placing those buy, keep placing those buy until there's no more space on your chart. Now, this one has its own advantage. I'm going to teach you guys how everything you need to know about account flipping. Okay. So this one has its own advantage and also has its own disadvantage. And the disadvantage is that if you are stacking on a particular asset class, for example, this ES 500, you need to understand the nature of price action on this asset class. For example, you need to make sure this market does not retrace often, or they don't spike. You know the meaning of spike? Market could just dip on a bearish day, they could just dip down, then reverse again. So you have to make sure this thing does not occur on this particular asset class, because if the market is retracing when you have stacked so many orders, let's say at this point that you have stacked to this level, the market start retracing, all the orders you have on top, there's going to be on drawdown, and before you know, they can just blow up your small account. Okay, so that is the disadvantage of this stacking. Initially, this was the approach I usually used to flip my small account back then, but I no longer use it these days because I've seen the disadvantages. I think it's more than the advantage, so I don't longer use it these days. So what I just focus on, that is what I'm going to teach you guys in this video. And I think I've told my mentorship student I'm going to hold a special webinar for them one night just dedicated to this approach I want to teach you guys. Now, this approach I want to teach you guys is called account decking. Now, this is how account decking works, okay? The way it works is that, remember I told you guys, the most important thing about trading in terms of technical analysis is direction of the market. Before you can flip any account, let's say any amount, you must make sure you know the direction of that day, if it's going to be a bullish or bearish day. After you know the direction of the market, if it's going to be a bullish or bearish day, the next thing is you must wait for the low or the high of that day to form. So if you are bullish that day, you're going to wait for the low to form. And if you are bearish that day, for example, this day was a bearish day, you have to wait for the high of that day to form. Okay, there's a reason why you need to wait for high or low of that day to form. Now, if you really want to know more about when the low or the high of the day is formed, there's a video I'm going to link to this one that I've created in the past on this channel that teach you guys how to frame low or high of the day. Okay, so after the high of the day has formed, the next thing is, for example, let's say we want to flip this $5 account, because after this video, I'm going to deposit $5 account. I'm going to replicate this thing I'm showing you guys live. You guys go to see it. Okay, so after the high of the day has formed, for example, this particular day, this bearish day, now the next thing is I'm just going to calculate 10 pip from my entry level. After I've calculated 10 pip from my entry level, then I'm going to expose the whole capital. Okay, I'm going to expose the whole capital because I know this is a bearish day and then the high of the day has formed, so there's no need for me to worry. So let's say I'm flipping a $10 account. Okay, let's say I'm flipping a $10 account. I'm going to start with 0.1 lot size. You know, it's different from account stacking. Account stacking, you can start with 0.01, 0.01 and be going before, like, you have traded up to 10 times, you get to 0.1 lot size. But in this account decking approach, we are going to start with the maximum lot size of 10 pip. Okay, we just want to risk 10 pip. So we input 0.1 lot size on a $10 account. If it's a $5 account, we input 0.05 lot size on a $5 account. Now, that's why you must make use of this broker. Okay, that's why you must make use of this broker. You cannot just do without this broker, or just look for a broker that have good leverage. Okay, because that's the only way you can make use of these high lot sizes on a small account. So after this high of the day has formed for this bearish day, what I will just do is go with 0.1 lot size. Okay, that is not going to be the end, because 0.1 lot size maximum, if you got like 50 pip or 100 pip, you're going to make $50 or $100. So that is not our target. Okay, so what I want to do is, the moment I go in with 0.1 lot size, then I'll wait for the market to move like 10 pip or 20 pip. After 10 pip or 20 pip, I'm going to go in again with 0.1 lot size. And most of the time, the way I do this thing is I do it session by session. What do I mean by session by session? I will go in London session. Like after going in this London session, I will also go in this New York session. Okay, for example, let me use this one. For example, this particular typical bullish day. Okay, so the low of the day was formed here. The moment I see that the low of the day has been confirmed, I will go in with 0.1 lot size. Either I can go in two times or 3 times in this London session. Then I will wait. Of course, I've taught you guys a strategy how to trade New York session. It's just Fibonacci retracement, measure it from the low of London to the high of London. Okay. Then I'll wait in New York session. I'll go in with like 0.1, 0.2. I've done this thing over and over again, My mentorship students, they are aware if you want to flip account. And I've already planned a special day that we want to flip account. We are supposed to have done it this week, but this week I've not been active. Last week I wasn't still active on my Telegram forum. So this July we are entering, I'm going to try my best that at least once in the week we're going to flip account, because I don't know why capital should be a problem to most of you traders, because I believe that if you're a good trader, capital should not be your problem, because with these privileges all these brokers now offer, you can take a small amount of money, take it to a big amount of money. So the moment I go in this New York session, then I will hold it for the rest of the day, like 50 pip or 60 pip. That is my maximum target. So before getting to the 50 or 60 pip, you see, I've gotten a lot of money. Now, this whole process that we followed on this day, what we need to do is replicate it the next day. For example, we flip on this bullish day. What we just need to do is wait for another day, frame the bias. If you don't know how to frame daily bias, I'm going to link a video to this one that will teach you how to frame daily bias. So you don't have to worry about daily bias, all right? So I'll link a video to this one. So you will just have to find the bias, then go in another day, repeat the same process, go in another day. So before the end of the week, we can at least, if we have a good trading week, of course, if you have a good trading week, we can at least, from that $10 get up to $2,000, $3,000. I've done it before, not even once, not twice. I've done it over and over again. And that is one thing I want to inculcate on my mentorship student. If you want to be part of my mentorship student, the price on a discount price right now. I'm giving it out on a discount for those of you that are my YouTube subscribers. So there's a link on the description part of this video. I want you guys to click. When you click it, you're going to have access to my WhatsApp number. You can send me a message on WhatsApp regarding mentorship. And I'll show you guys the information on how to enroll. Either you click on the WhatsApp number or you click on the Telegram link that will send you guys to my Telegram, direct Telegram. Okay.